Hello, this is Pat Walker, Mission Winners. We're doing a video for the weekend on the ETFs. You can say, why do we do that? It's not that we like to scan charts, like it's a hobby or something. No, the reason we do this is to be organized. Money flows to leading sectors. Money moves out of lagging sectors. And that can rotate through time. But we have a limited amount of money and a limited amount of time. Why don't we use it properly and deploy our assets in areas where there's strength, right? Strength begets strength. Ride trends. One of the best things we can do, scan the ETFs, the major index ETFs, the major market index ETFs, and see areas to concentrate on, but also areas to avoid. It'll help you make money, but it will also save you money and maybe some heartache too. So here we go. ARK Innovations lagging. It's losing all the moving average, below all the moving averages, fell on heavy volume. There's nothing to do with this. You can say it might turn here. The might word, using the word might isn't really a good term in relation to investing, okay? Oh, it might go up. Oh, it might stop going down. Leave that alone. Just going down, leave it alone. Nothing to do with it. Next chart. Cloud computing was great. Lost some leadership here. What's it need to do? Cloud computing in those stocks needs to push back above the 50-day, which is the green line. Had a decent day on Thursday, gave it back on Friday. Market action's quite choppy, so I encourage you, be careful. It's like, oh, I got to do something. Only do things that are clean and simple. Please never think that just because the market's open for business, you have to do business. That's not true. Wait till things line up and then hit it. There you go. Energy's strong, and it has been strong. Look at this. Look at this picking up through here. Volume steadily. What does that tell you? Energy stocks have been strong. They're still strong. Area to look at. Dow Jones Internet, it's chopping around here a little bit. Not a lot of power. It's below the falling 50-day. Be careful with that. Internet. IBD 50, this lost some power right here on volume. Look at that. Till this starts pushing above the 50-day, you got to leave that alone. Also, IBD 50 is a great proxy of the leading stocks. It's kind of chopping around here, indicative of the market. Gold miners below all the moving averages, basically. Below the falling 200-day and below the falling 50-day, leave it alone. Junior gold miners, same thing, leave it alone. Gold, below the moving averages, leave it alone. By the way, look at this. Gaps up right at the 50-day and drops right back down like a rock. There's nothing to do with it. Leave it alone until it shows strength. Cybersecurity started to push through the 50-day, closed a little bit below it, needs to get back above these moving averages and above these highs. Potential. Nothing yet, though. And by the way, that was serious selling right there. And that was serious selling right there. Be aware of that. Biotechnology, another biotechnology ETFs. Now you've seen two of them. You've seen this one and you've seen BBH. Right? Oh no, I took BBH off. My apologies, only needed one. This is enough. It tells you, leave it alone. Online retail, there's nothing going on. It's below the moving averages. Nothing to do with it. North American technology started to come back a little bit, but what was a telltale sign that there may not be a lot of power? And we talked about this, with the Mission Winners, VIPs and things like this, focusing on where there's power. Look, it was rallying back up on decreasing volume. The volume's dropping off. The power's dropping off. Leave it alone. Medical's lagging. Leave it alone. Mid-caps chopping around. Needs to get back over the 50-day. Till it does, be careful. Home builders. This was a leading group. And look at it now. Below the 200-day. It tells you in 1 second. It says this. I don't need to look at home builders. Done. This owns a lot of the maxlist stocks, as I say right here. And the big tech names. It's lagging right now. This needs to start showing some life. Know this. We are coming into the fourth quarter of the year, which can be a really good quarter. You can make your year in this last quarter. Now, am I say you're going to? No, I can't say that. I'm saying historically it happens. So what's our goal always at Mission Winners? And I hope it's yours too. Always be prepared. Always be prepared. That's why I make these videos, to help everyone be prepared. Small caps still chopping around, needs to get back, pushing above these highs. Starting to show a little bit better strength, but nothing really special. Airline stocks, okay, it's kind of choppy, nothing really powerful there below the moving averages. Regional banking, look at that. It's been strong. It has been strong. What does that tell you? You could be looking at some regional bank stocks. You can punch up KRE and find out their top 10 holdings and look at them. That's systematizing. Mid-cap just chopping around, be careful. Oil services kind of picking up, just like the other energy ETFs. See how you connect the dots? There you go. Online retail. You could look at what they own and say, I think I'm staying away from that. It's below the falling 200-day. It's below the falling 50-day. It's below the falling 21 EMA. Leave it alone. Software, leave it alone. Done. Don't overthink it. You don't need to. Till it starts to turn, nothing to do with it. Done. Inverse ETF started to lift up, pulled back. This is the inverse of QLD. Just chopping around, and here's QLD. Living below the 50-day. Look at this. Rallies up, has a reversal bar here, a bullish engulfing bar on a pickup in volume, gaps up, runs up, closes near the lows. There's no power there. And by the way, you want to see a great lesson? Hits the 21 EMA almost to the penny and bounces off of it. There you go. What's the 50-day doing? Falling. What's the 21-day doing? It's falling until it starts showing some life. Be careful. Same thing's true with the non-leveraged one. Simple. The inverse ETF, SDS, just chopping around, nothing special there. I've used that word chop a couple of times. It's just, things are choppy. Cloud computing, another cloud computing ETF, showed a little bit of life, but what was missing on this bar? Remember, we always look at price and volume. There's not a lot of power there. Needs to take out the highs of this bar with volume, power, conviction. Silver lost its sheen. Okay, sorry. Semiconductors, not even semi-sweet. Semiconductors, not even semi-sweet. Oh, excuse me. This is steel. Semiconductors. There we go. Get it right. Semiconductors, another ETF, nothing there. S&P 500, nothing there. I want to show you this one. You see where this closed? Right there. Going into that close, we bought this. All right? A couple of times. Look at that volume pickup. That was strong. And what happened? We got that. And you know what? Right here, that's nice. Guess what we were doing in there? We were selling into strength. That gaps up. That's a gift. That's a good move in one day. Gaps up, we took it. By the way, in this entire move, never look at any 5 or 10 minute charts. Don't need to. Primarily concentrated on the daily. It's simple, nothing fancy. Price and volume. People talk with their mouths and vote with their pocketbooks. They voted on this bar, ran up, sold it, done. There you go. Solar, flare out, nothing there. Small cap, nothing there. Oil, another oil ETF, acting decent. And it has acted decent. What does that tell you? You can look at some oil stocks. Aerospace and defense, it's lagging. Had a good day here on Thursday, but note, it's still below the 200-day. This needs to start showing some leadership. Until then, be careful. Home builders, nothing there. Materials, nothing there. Communications, lagging, nothing there. By the way, it's below a falling 50-day. There's a great guideline for you. Is it good above the 50-day and better below the 50-day? Yeah, it is. Focus on that. Energy, another energy ETF. Look at that. There you go. Financials are hanging in there. Energy, financials. Okay. Industrials, choppy, nothing to do with it. Technology's lagging. Look what it did on Thursday. It gaps up, closes near the lows. There's no power there yet. Be cautious with technology. Consumer staples, nothing there. Leave it alone. Utilities, there's nothing electrical with that. I'm sorry, I had to say it. We're having a real gas over here. Okay, don't hang up on me. Here we go. We're almost done. Got to have a little fun too. Dad humor, right? Here we go. Consumer discretionary. Push back above the 50-day. It's just chopping around. Not a lot of leadership at this point in time, but better than a lot of them. Metals and mining, lagging, nothing there. Oh, look at this. XO. I'll be darned. Oil and gas exploration. Oh, another energy ETF. ILB. So what do? You can focus on energy stocks, and you have. And we have. Retailing, lagging. Nothing there. Software needs to show some leadership. Back to the top. You can say, okay, Pat, you mentioned energy a couple of different times. Any energy stocks that you were looking at? Yeah, this one. Own it. This was on the key list. There you go. This one. Yeah. Yes. Own it. There we go. This one. Yeah. There we go. That's the real world. Connecting the leading groups and then find some leading stocks in that group. Look for clean and simple bases and buy them. There you go. Anyway, I wanted to share that with you. That's real time, by the way. That's connecting the dots. That's not textbook. That's getting nitty gritty in the trenches on how to do it.